Alright, good day everybody. This is Festus FX and this is an educational video. So someone asked us to do a brief analysis on how to analyze synthetic indices on this particular broker. So this is Weltrade broker. They also offer their own synthetic indices just like the RIV. Okay, so you can see FX volatility 20, SFX and so on. Mind you, this is the first time I'm trading with them, so see their various synthetic indices they offer. So let's just pick a pair and make an analysis together. Okay, let's see how volatile it is. So let's pick a pair. Let's look at the first pair, volatility 20. So first I look at the properties, and from here I can see that the minimum what's it called, the minimum volume is 0.01 and the maximum volume is 7. Okay, and step 0.0114. Okay, so from here let's go to the chart. All right, so first is on this is the 1 hour time frame. As you can, this is the weekly time frame. I think this is the weekly time frame. This is the 1 hour time frame. This is 1 hour time frame. So we can clearly see that the market has been in a downtrend. Obviously, I hope you can see it's so clear. All right, and like I teach, you can use your trend line to determine the trend. And you can see from that high, bring it down here. So somewhere in the future, the market is definitely going to come back to this trend line. Okay, so for now, today has been, price is currently bearish. All right, but personally I'm expecting price to be bullish for 2 reasons. So look at this. All right, so you see these lows from previous day. You see how it was swept here. Let me quickly do that. $6968. Okay, save. So we notice that these lows were swept out, as you can see. Let's do this. All right, so you notice these lows were swept out. Do not forget the market is bearish. Well, we are only trying to look at what the market scenario is presenting to us currently. And then from here, notice we had this change in market structure. I hope you're following. So we call this CHOCH. Okay, that's change in market structure. Then we notice the market created these lows that we have here, and right now it has been swept out. All right, so we ultimately have these lows here, these lows. We have these lows here. So if price sweeps these lows out, it's continuing to be bearish. Okay, but for now, this is what we're expecting. All right, so stay with me. So we call this, see this highs here, this candlestick here, this we call this drawn liquidity, these two. So expecting price to sweep out this and mitigate these areas, take out these highs, okay, because of this change of structure. And what will confirm that is if these highs are swept out. So I'm going to take note of these highs here. That is where it's going to be our target. We're just going to target 1:4. All right, so this is the 1 hour time frame. Okay, now let's take it down to the 15 minutes time frame. So on the 15 minutes time frame, you can obviously see that the structure of the market is already shifting from a downtrend to an uptrend. Let's see. I can't get that. Okay, so you can see it's already creating these higher highs and higher lows. Okay, so on the 15 minutes time frame. So what am I going to do? I'm going to take note of the other block that is price is currently trying to mitigate. This is the other block. Now personally, I like to use the bodies of the candles, and currently this will be where I want to what quickly just buy. So I could just quickly just buy here. Okay, so click on buy. All right, now something that I can do is take note of the fair value gap. So why the fair value gap inside here? You can see it. This is a fair value gap, and price has mitigated itself. So the last low we have here was 105,220.61, and this low is, so this is 220 and this is 219. So obviously the price has actually already entered the fair value gap. Okay, so now I could decide to place a buy limit here just inside this fair value gap. Now ultimately my stop losses are supposed to be below this low. Okay, ultimately below this lows. Now I'll put it here, right? So invariably what I'm saying is, if price should hit my stop loss, then there's no more reasons for us to what to buy. Okay, so now we have our entry, next thing is, and our stop loss, next place is our target. So two things: we could target this internal range liquidity, which is this high, and that's a 1:5, or we can target this external highs, but I'm not expecting price to get this high, so I'll rather stick to these areas for my buys. Okay, so basically this just did a quick analysis on FX index 20. Okay, am I correct? So there. So remember, if price should take out this highs, price goes above this highs, we call that a break of structure. We'll wait for some retracement, then we're going to buy to these areas, possibly till price gets to this trend line, and then we can keep selling again. I hope you learned something from this video. If you have any questions, drop them on the comment section, and like, share this video. Make sure you subscribe to the channel. See you in the next video.